Hey everyone, and welcome back to Crypto Corner here on Schwab Network's YouTube channel. Quick reminder, click on the subscribe button for your continuous market coverage. This week, of course, has had no shortage of crypto headlines, so let's dive right into it. Joining us now is Adam Lynch, director at Schwab Equity Research. Adam, one of the names we've covered a lot here has been Coinbase. The company has increasingly supported the tokenization efforts, and this week also announced a new platform. So they've been very busy. Tell us more about the latest from Coinbase.
No problem, Jenny, and thanks for having me back. We could probably spend the entire segment today talking about Coinbase, maybe even call it Coinbase Corner, given all the news surrounding them this week. Just yesterday, I saw a story about how they plan to relocate and reincorporate from Delaware to Texas. And the rationale given was that the state of Texas's legal and regulatory environment is seen as more supportive of innovation and technology compared to that of Delaware. Then there was news on Tuesday that their potential $2 billion deal for stablecoin startup BVNK was called off. Now, there wasn't a lot of news in terms of why the deal was called off, but after going through the due diligence phase, both companies decided to walk away from the deal. But let's talk about those tokenization efforts. So, Coinbase announced that they're launching a new platform that allows individual investors to purchase digital tokens before they're listed on the Coinbase exchange. These digital coin offerings are launches of new coins that were very popular back in 2017, 2018, before prices crashed and regulators started to crack down on them. Oftentimes, they're referred to as ICOs, or initial coin offerings, and are thought of similarly how IPOs, or initial public offerings, work for stocks. Now, Coinbase is planning to host one token sale per month on the new platform. It'll use an algorithm to determine how these tokens are allocated, and investors will be able to submit purchase requests during a 1-week window prior to the listing. Following this period, the algorithm will distribute the tokens, aiming for a broad and equitable distribution. This marks the first time since 2018 that U.S. retail traders will be able to participate in these public token sales. And big picture, it seems like a pretty smart move for Coinbase. They've been trying to diversify into more business lines and reduce their dependence on trading fees, and this could be a great way to do it.
No, absolutely. And to add on to that, earlier this week, we also got some news from the Senate Agriculture Committee, which released more information about the long-awaited crypto market structure bill. So what really did investors learn from that key event this week?
Yeah, so with the government open again, we are starting to actually see some progress. On Monday, the Senate Ag Committee released its draft of legislation to regulate the crypto industry, essentially giving new authority to the US CFTC, the Commodity Futures Trading Commission. This draft builds upon some of the work that was done in the summer, where in July, the House passed the Digital Market Asset Clarity Act. Now, while the Senate Banking Committee also has their own draft of legislation, which looks to allocate jurisdiction between the SEC and CFTC, the Ag Committee's version is vital because they're the actual agency that has jurisdiction over the CFTC. Now, this draft defines digital commodities and other items, but it still has many unresolved issues. Senator Cory Booker, Democrat from New Jersey, pointed to concerns about the CFTC's limited funding resources, given they only have about 500 full-time employees compared to over 4,000 at the SEC. The committee's draft attempts to address this concern by including a new funding stream for the CFTC, but it's really only described as fees collected from unspecified crypto entities, so there's still some questions around that. Another potential roadblock is the Democrats' concerns over conflicts of interest, given the Trump family's involvement in the industry. This is an issue which the Senate Ag draft attempts to address. Overall, I think this was seen as positive, meaningful progress and a continuation of the momentum that's been building over the past year.
No, absolutely. And you did mention, of course, a critical event being the government shutdown. Bitcoin has been volatile throughout the entire duration of that government shutdown, with ETF flows mostly going out, unfortunately. However, this week that has changed. So give us the latest there, especially given the fact that we have finally a government that has been reopened officially.
Yeah, sure. It's obviously been a pretty wild month or so. Now, after dipping below 100K, Bitcoin has stabilized somewhere around this 102 to 105 range. Last Friday, we saw $550 million in net outflows, which was the largest single day of withdrawals since August. But like you mentioned, this week it's been the exact opposite. On Monday and Tuesday, we saw some of the largest inflows since early October. In fact, the $525 million of Bitcoin ETP inflows on Tuesday was the highest single day since October 7th. Now, this trading activity suggests a little bit of a rebound in consumer confidence after the crypto market crashed a bit over the past few weeks. There has been a lot of positive catalysts coming together recently. Some institutional buying after this dip, strategy even added more. There's been the deal to end the government shutdown, and then some progress on that legislation we mentioned earlier. Overall, I think this was just a healthy market correction, helping reset leverage and make room for additional institutional participation. Now, cooling inflation data and the potential for these $2,000 tariff rebate checks could further ease market tensions and trigger even more of a rebound in the months ahead.
No, absolutely. And especially I think all of the pessimism has been a bit overblown. It's like we were expecting some really strong months, of course, this fall that we haven't seen play out. But all things considered, we're still sitting at a pretty healthy 1 year gain. So that's how I tend to look at things. But appreciate it, Adam Lynch, for all of that insight. Director, of course, at Schwab Equity Research. Thank you so much for dropping by. That does wrap up another weekly edition of the Crypto Corner. Be sure to tune in to our daily show starting at 8 a.m. Eastern right here on YouTube or at schwabnetwork.com. I'm Jenny Horne. We'll see you again soon.